I imagine January of 2026 is going to be very different for our agents and brokers. Can you sort of imagine what the day in the life is going to be like for an ACA broker on January 4th?
One thing that's going to need to be on radars for January 2026 is that people who were auto enrolled in the past into a $0 premium plan, like that's the premium they pay because their subsidy is so large. Before they would just auto enroll, things are good, they didn't need to do any work. Well, now there's more income verification with the marketplace. According to the one big beautiful bill as of right now, is that everybody would need to re-verify their income every year, which would effectively end these auto re-enrollments, which obviously makes much more active work for enrollees and brokers.
Welcome to Insuring Growth, where health insurance leaders come together to discuss policy, strategy, and the business of health insurance. I'm your host, Brendan McLoughlin, president of E123, the industry's only distribution management system designed specifically for health insurance. Today, we're talking about big changes coming to Medicaid and why every health plan executive should be paying attention. Just a quick note before we begin. This episode was recorded at an earlier date, so keep in mind that timing may affect some of the context. That said, the conversation offers valuable insights we're excited to share. Let's get into it. Our guest today is Dr. Makayla Lavender, a health economist and assistant professor at the University of Nevada, Las Vegas. In particular, she has studied how Medicaid and marketplace insurance impact pregnancy and labor market outcomes. She's also looked at older populations with how the marketplace impacts early retirement and take-up of Medicare advanced care planning.
Thank you. I'm glad to be here.
So you talked about the $880 billion in Medicaid cuts, but what other ways is the administration looking to rein in or to spend healthcare dollars more efficiently?
Yeah, so one thing that isn't explicitly stated is that those enhanced marketplace subsidies are going away.
This is the ACA marketplace.
Yes.
So tell us a little bit about what these enhanced subsidies are in case our listeners aren't up to speed.
Okay, so with the Biden administration, from 2021 through 2025, there were enhanced marketplace subsidies. And so the share of everyone's income that they were expected to pay for insurance was lower. But additionally, where the subsidies were only available for people 100 to 400% of the federal poverty line, now it goes past 400% of the federal poverty line until the subsidy just naturally phases out to zero. And so a lot more people were eligible and they were getting more money. So those are going to sunset at the end of 2025.
And so they were eligible for more subsidies, so they were able to enroll in better ACA plans?
Maybe they enrolled in better plans. Like maybe they did decide, okay, well, I have this budget that I'm willing to spend for a premium and now I can get a gold instead of a silver. That's possible. It could also be that they were just much more likely to enroll in a $0 plan. So maybe they said, I'm going to pay a $0 premium and now I'm going to get a silver plan, right? So it could be either direction, that they paid less or they got better quality coverage for what they were willing to pay.
And what percentage of plans on the exchange would have been covered by these subsidies? Are we talking about a 10% edge case, or is this really common?
Oh, it's the majority of people on the marketplace are using subsidies to help pay for it. And some of that too could even be like among the early retiree population. They might have quite a bit of funds. That's why they're not working, but they know that they have this extra tax because of the subsidy that goes down as their income goes up. That's essentially a tax. And so they scale back their income. So some of it is just who chooses to go on the marketplace. They're the 100 to slightly above 400% now. Or it could be that people are strategically keeping their income in that range to qualify for subsidies.
And these subsidies are going away? Is that as set in stone?
They're not going away. They're just being scaled back, right?
Okay.
So subsidies for people above 400% of the federal poverty line, those are going away. But everyone else, they might be paying like 2 percentage points more of their income for the premium, roughly.
So that could have a pretty big impact on the dynamics of the marketplace, right?
Yes.
How do you think that's going to impact the way that people make choices in health insurance?
There's a wide range of ways that people might respond to the higher premium that they have to pay after the subsidy, once the subsidy goes down. One thing that they could do is they could shift into lower quality coverage plans that have cheaper premiums. So they might move to a bronze plan, for example. It could also be that people just leave the marketplace entirely and say that premium is too high for the amount of coverage I'm going to get, and I'll just risk it and be uninsured. So that's also possible. When we're thinking about those early retiree population, maybe some of them just keep working a little bit longer and keep their employer-sponsored insurance.
Interesting. And here we're talking about under 65, and we're largely talking about families or individuals that don't have employee-sponsored insurance. So a lot of our listeners are interested if the roles of the ACA are going to decrease, does that open up an opportunity for off-exchange options like short-term medical?
That's a great point. That's another thing that could happen, is that people don't necessarily leave the marketplace and become uninsured, but they might leave the marketplace and go to these off-market exchange type products where the coverage is a little bit, it doesn't have as many restrictions and rules around it. So the premiums can be cheaper. Now you can't get subsidies on the premium, but if you're saying my subsidized premium is just too expensive still, then maybe going to an off exchange product could make sense, especially for people who are on the higher side of the income spectrum and therefore get less subsidies.
So theoretically, there could be off-exchange options. I think one of the challenges to that has always been the individual mandate. What is the status of the individual mandate in the ACA?
The individual mandate actually went away during Trump's first term at the end of 2017. So for plan years starting in 2018 and beyond, there hasn't been any penalty for not having insurance. And people really thought that that was going to kind of cripple, especially the marketplace plans, and it really actually had very little effect. It seems like the carrot approach of giving people subsidies, which was much more impactful than kind of that stick approach of penalizing people who didn't have coverage.
So it would seem reasonable if the industry can create appealing off-exchange options that are maybe better choices for what an individual or what their family needs at their particular point in life, that there will be a market for that, and that with the changes in the ACA, there may be more demand for that in coming years than we've necessarily seen in the past.
Yeah, I think that's accurate. I think that as the enhanced subsidies go away, there's going to be more movement away from the marketplace.
I feel like there was a flurry of proposed or potential changes to ACA in the marketplace, and I am not sure what all is real and what all is just talk. So I heard of shortening the enrollment window. I heard of eliminating healthcare.gov. I heard of eliminating the healthcare navigators for the ACA. Can you walk us through some of the very specific changes that are actually real and will impact us this open enrollment?
Yeah, so I'll start with like the healthcare.gov. I don't think that's going away. The next thing, the navigators, there's definitely been scaling back of their funding pretty drastically. I'm not sure they're completely going away, but I think there's going to be more role of brokers rather than navigators. And then the shortened enrollment period, that is definitely something that's going to happen. We're seeing that in the CMS proposed rule for the marketplace. They're going to shorten it back to ending December 15th, where currently it goes to January 15th. And this is kind of a reversion back to what used to be. It used to end December 15th, and that was extended, and now they're shortening it back. That's in the CMS proposed rule. It is also in the one big beautiful bill that has gone
Got it.
through the House. So they're targeting that both directions.
And if either one of those, either the rule or the bill are enacted, would that impact open enrollment for 2025, or is that a 2026 and beyond thing?
Because another big change is that currently people under 150% of the federal poverty line can have an enrollment period whenever on the marketplace for the federal exchanges. And then some states have income based special enrollment periods as well. And both the CMS proposed rule and the One Big Beautiful Bill are saying no more of that. And so that's important because around 45 to 47% of people using the marketplace are below 150%. So they've really been able to enroll whenever, and now they have to enroll during that standard November to December enrollment period.
So if all of these changes happen, the ACA players in the industry have a lot of work to do between now and open enrollment. It's going to be a very different open enrollment if these changes actually happen, right?
Yes. It's going to be much more busy because the time period is going to be compressed. It's also going to have a lot more disgruntled enrollees because they're finding out that they're going to be paying more, and that could be a shock. And there's just going to be a lot of questions that they're going to have. So it's also going to be more time that you're probably going to need as a broker talking with your clients about trying to find the best plan and explaining everything that just changed. Especially because, there has been a lot of discussion with the One Big Beautiful Bill about Medicaid, but there's been much less about marketplace. And so people who are on the marketplace might not be aware of a lot of these changes that are slated to be coming.
That's very interesting because there aren't big, exciting headline changes like $880 billion, but there are a lot of changes, and they're really going to affect, as you point out, not just open enrollment and signing up for policies, but the complaints, the questions, the needs of the members and their families of getting them into the right policy is going to be a much bigger challenge this year than it ever has been.
Yes. And I think adding on to that, the marketplace is at the highest enrollment it's ever been, right, largely due to these enhanced subsidies and more flexibility over the last several years. A lot of those policies were justified with the pandemic and making sure people had access to health insurance and, being understanding of financial challenges. And so now you have a lot more people who are interested in the marketplace, and that's more people to help, but also to walk through all these changes.
So I'd like you to look into your crystal ball. We have two pretty big shifts going on. The changes in Medicaid feel like they are going to roll out over time, and the changes in the ACA feel like they're a bit of a tsunami getting ready to hit this open enrollment. So if you look forward a couple of years and thinking about the under 65 market in particular, where do you think the for want of a better word, the winners are going to be in terms of where people gravitate to get their insurance?
Are you thinking about from the marketplace, where are people going to go, or from Medicaid, where are people going to go, or just overall across everything?
If you think of all of the moves and all of the puts and takes, the Medicaid will probably send some people onto the exchange. The exchange will probably send some people onto off-exchange products. When everything settles, where do you think the business will see greater enrollment than they see today? And where do you think there will be lower levels of enrollment than we see today?
Okay. That's a lot. I'll try and take it.
We're recording this too, so we're going to hold you to it. 2 years from now, we're going to show you what you said here.
With Medicaid, I think you're going to see a lot of people just go to being uninsured, right? If they don't meet work requirements, they're not going to be able to get to the over 100% of the federal poverty line for marketplace, likely. And I mean, if they had been on Medicaid before, they were below 138. So it's not like they're working a part-time job making a lot of money. In that case, they could go on to the marketplace, but they wouldn't have been on Medicaid before. So Medicaid, it's likely people are going to end up uninsured if they're going somewhere, not really move on to the marketplace. With the marketplace, you could potentially see some people, go down to Medicaid even, right? Like if the subsidies are just expensive, maybe they strategically lower their income to go on to Medicaid, which would be essentially free for them. Or on the higher end of the income spectrum, going to off exchange products, like you were saying. And I think there's a real potential that some of those marketplace people also end up becoming uninsured. Part of that is we really think a lot about Medicaid, marketplace, Medicare, employer sponsored insurance. We don't really think that much about off exchange. And so if broker and agents can kind of say, like, well, there is this off exchange plan, I think that's just not really on people's radar. And it's a lot harder for individuals to shop those plans because they're not all on one unified website like the marketplace plans are. So that's some thoughts on the shifting there in terms of thinking about the risk pools within Medicaid and the marketplace. It's probably those people who utilize less care that are going to leave those programs. And so risk pools could get more expensive, especially on the marketplace. That drives up the premiums that the people left on the marketplace are paying. And that could potentially lead to kind of a small death spiral like thing where if those premiums go up and people leave, premiums go up more. And that could be something that might take a while to find a new equilibrium.
That's very interesting. And I don't know if you know the answer to this, but we've seen in the headlines some pretty big national carriers announcing that they are going to get off of the exchange altogether and stop offering plans on the exchange. Aetna announced they're pulling out of ACA.
Really?
Yeah, which
across all markets, not just in particular ones.
So they announced it as a part of a shareholder meeting where they were getting killed because their MLRs are out of control, and largely because they've been treating MA as a land grab. And if you've got medical conditions and you're an agent, or if you're dealing with someone who's got well-documented medical conditions, you put them in the brand name. You don't put them in the local player, right? You put them on Aetna or you put them on United. So their sort of land grabby mentality in MA really messed up their risk pools. And yeah, there's risk adjudication and that can offset some of it, but I think United's MA MLR was 109. So you just can't sustain a business if your expenses are 9% more than you're bringing in revenue.
Right. This is where we talked about a little bit earlier, but the insurance company gets paid based on the amount of comorbidities that somebody has, but it doesn't adjust for their propensity to use care, right? And so
exactly,
you might have this really high set of comorbidities, but if you never actually go to the doctor, maybe you're lacking transportation or you're afraid of doctors or something that's not shown in your comorbidity list, you're going to be really cheap for that plan. Where alternatively, if someone has comorbidities, but they're a hypochondriac and they're going to be really expensive. So that's interesting that there might be some selection into the brand names, that those people who select brand name, big player insurance are also higher propensity to consume people. I haven't heard that, but that's interesting.
So we're seeing an interesting dynamic. I don't know if I would call it a trend yet, but there are 1,200 Medicare Advantage providers in the country. The vast majority of them are standalone hospitals or regional health plans that mostly provide Medicaid, and because they want to provide DSNP for their dual eligible population, they also have an MA plan. And as these local or regional health plans are seeing potentially Medicaid dollars disappearing, they are thinking that moving into Medicare with more of a focus would be a smart strategic move. So when you've got a local plan that's competing against a national brand, there very well may be some sort of adverse selection or advantageous selection, depending on whose point of view, where the greater consumers of healthcare are more likely to go with the national brand because of the brand recognition, and the local player is more likely to get maybe someone who is less motivated by that. So there could be some interesting dynamics. I don't know if it's a trend yet, but we're seeing some fairly decent sized players who only have DSNP for now starting to think they want to get into full blown MA.
I think it's probably important to note when we're talking about these Medicaid cuts that it's not really directly like DSNP that's going to be affected. It's much more of that ACA expansion population that's directly impacted, right? They're the ones who are getting the work requirements, not seniors who also have Medicaid and Medicare together. And it's immigrant populations. Those are going to be the people who are most impacted. Now, to some degree, the Medicaid budget within a state might be kind of fungible. And so if they're needing to pay more for that ACA expansion group, maybe they do scale back on coverage for dual eligibles, but that's going to be more of an indirect effect.
So I definitely want to dive a little bit deeper into the dual eligible population and maybe imagine, moving some of the pieces down the chessboard. What would happen to the dual eligible member who is either not able or just is not interested in doing the paperwork necessary to meet the new work requirement for Medicaid, but they are dual eligible currently? Would they lose the dual eligible status and move entirely onto Medicare?
No, the work requirements do not apply to that dual eligible population.
Interesting.
It's really only for not children and not seniors, right? It's that under 65, but also not children because we don't expect children to work, right?
The 018 U65 market.
Yeah. And it's doesn't apply to disabled people too. Obviously, we have some under 65 disabled people who might be dual eligible. It doesn't apply to them either.
Okay. So there's no, let's talk about dual eligible DSNP for a minute. Is there anything on the horizon that you see would either bolster this population or make it more challenging to be in that market?
I think they're in the proposed rule from the Biden administration and then got finalized by the Trump administration. There's some things that would strengthen the DSNP from enrollee quality perspective, right? They need to have unified cards, like one card for both, not two cards for the two parts. So trying to kind of give a holistic feel to the plan. And then there's also a requirement that they have like an integrated, unified health risk assessment. So I think those are good steps to kind of making the dual eligible people feel like they're not navigating two separate systems, but it really is an integrated plan. And that's something that we saw support from across the administration change.
Professor Lavender, I've heard you say that the ACA marketplace is crazy right now and that there's way more going on there maybe than any other part of healthcare. So you've talked about the changes to the enhanced subsidies, but I understand there are other changes to other subsidies that are going to impact the ACA. Tell us about that.
So this is going to be a little bit nitty gritty of how it works, but it's really important. The cost sharing reduction subsidies are going to be funded again by the federal government. So that sounds like, okay, the federal government is paying more for these subsidies. That's going to be more money flowing out. But it's actually the opposite.
Let me walk through this. The cost sharing subsidies currently are not funded by the government. And in the future, they will be. And so as a layperson, I think that means the government is going to spend more on healthcare, but you're telling me that's not the case.
Correct. So maybe it's even helpful to go a step further back and say, what are the cost sharing reduction subsidies? These are subsidies for people who are below 250% of the federal poverty line and are on a silver plan. And what it does is it reduces the deductible, the copay, the co-insurance, and makes the cost sharing part cheaper, but it's only if they're on a silver plan. And so what happened with the first Trump administration is they said they're trying to repeal the Affordable Care Act any way they could. And they said, those funds for those subsidies actually weren't appropriated in the Affordable Care Act. And it went through the courts, and the courts actually agreed and said, yes, they were not. And so the federal government stopped funding the cost sharing reduction subsidies. But what ended up happening is the insurance companies were allowed just to raise the premium of a silver plan to account for the fact that they are paying for those cost sharing reduction subsidies. They still have to provide them, but the insurance company is paying for them. So of course they just raise the premium. Now this affects everybody, even if they don't have a cost sharing reduction subsidy, and even if they're not on a silver plan, because the silver plan is the benchmark for how big your subsidy is. It's based on the difference between what percent of income you're supposed to pay for your premium and what the second lowest cost silver plan in your area for your age pays costs. And so that difference becomes your subsidy. And then that subsidy applies to all plans, whether you go down to a bronze plan or to a gold plan, you pay the difference between that plan's premium and that subsidy, which is based on the benchmark plan. Does that make sense so far?
That makes perfect sense.
Okay. So as the cost sharing subsidies go away, the silver premiums, presumably, are going to go down because they're no longer paying for those costs. So that means the benchmark plan is going to go down. That means everybody's subsidy is going to go down. And so people who might have before been on a $0 bronze plan, well, their bronze plan has the same premium, but their subsidy is smaller. So they're going to pay more for that bronze plan. And that's the same thing for silver and gold. Now, if you're on the benchmark second lowest cost silver plan, it's not actually going to affect you because the premium is going to change dollar for dollar with the subsidy, and you'd be in the same place. But bronze plans, gold plans, any other plan that's not silver, so the premiums are the same, but the subsidy changes, those are going to be more expensive.
And again, are we talking about just a few edge cases here, or are we talking about a large percentage of the people on the exchange?
Everybody on the exchange who has a subsidy, they're all going to be affected.
Okay. So that's going to be a pretty major. And when do we expect this will impact the marketplace?
January 2026.
So several times now you've mentioned January 2026, and it strikes me that in January of 2025, the agents and brokers who work with ACA plans were busy signing people up. It was the last few weeks of open enrollment. So with all of the changes that you just talked about, I imagine January of 2026 is going to be very different for our agents and brokers. Can you sort of imagine what the day in the life is going to be like for an ACA broker on January 4th?
Yeah. So before the enrollment period went to January 15th. And so that was, final push of getting people enrolled. Right. Now, those people all needed to be enrolled before that. So in some sense, maybe they're just on vacation. They had a really busy December.
So it's good news for them. Time to put their feet up.
And they're on vacation. But I think there's going to be a lot of people who are caught off guard in January, and a lot of smoothing things over, continuing to walk people through and explain the changes. One thing that's going to need to be on radars for January 2026 is that people who are auto enrolled in the past into a $0 premium plan, that's the premium they pay because their subsidy is so large. Before, they would just auto enroll, things are good, they didn't need to do any work. Well, now there's more income verification with the marketplace. And so if you're going to auto re-enroll into what would be a $0 premium plan for you, there's going to be a $5 premium until they go back and re-verify their income. And so that's
Oh,
also going to be something that's really important. And later on, and like I think it takes place in January 2028, according to the one big beautiful bill as of right now, is that everybody would need to re-verify their income every year, which would effectively end these auto re-enrollments, which obviously makes much more active work for enrollees and brokers.
absolutely. So it sounds like not unlike what we see in Medicare, where post enrollment there's an awful lot of activity, where agents have a lot of work to do to service their members. It sounds like the ACA may be moving in that direction.
Yeah. And also I think that the enrollment periods end up kind of coinciding. So agents who are doing both Medicare Advantage and marketplace plans, they're going to be really busy.
And it's going to be a challenge. One of the things that I've heard in this industry that I find really compelling, most of the people that I work with and the guests that we have on this program are executives at carriers and health plans and sort of the providers of these policies and the providers of care. The agents that sell or market or enroll people in health insurance, they don't view it as a single person or a single life. They view it as a family. They view it as a household or an extended family. And if they're taking care of the parent who's out of work and is on the exchange, they also want to be able to take care of the grandparent, right, who is on Medicare. So having these things overlap is going to create, for those agents that are really serving the whole household, it's going to create a very interesting, very tight open enrollment period.
Yeah.
Yeah. So thinking about agents, because at the end of the day, with all of the advances in AI and e-commerce, the vast majority of health insurance is still connected to a family through an agent. Are you aware of any resources that agents can use to get up to speed on all of these changes? Because there's a lot of changes and they are going to be asked.
Right.
Right?
I think from an agent perspective, trying to follow what's happening with the one big beautiful bill, maybe you wait till it actually finally passes, right? Because things could change a little bit between now and then. So hopefully they say that they want it done by July 4th, probably a little bit after that is more realistic if it gets through. Then really start reading up, trying to find that. I think the KFF, formerly the Kaiser Family Foundation, they have a lot of really good up-to-date policy information.
And so what website is that?
So KFF, and they actually have a tracker on the one big beautiful bill.
Terrific.
So that's a good resource. They seem to be updating it pretty regularly. I think also, hopefully the insurance plans start providing this information to them as well. I think window shopping before open enrollment and maybe helping members earlier than when they can actually enroll is probably a good idea.
Right.
And then, yeah, just prepare for a really busy enrollment season.
I think it's kff.org.
Yeah.
And it used to be the Kaiser Family Foundation, and they're just an absolute reliable source for not sensationalized health news, which is a challenge because health is so
health policy health economists that are doing the work, and it's pretty straight down the middle.
Well, I think that's all the time we have. We could probably spend hours talking about the ACA and the impacts of some of the changes we're seeing coming down the road. But I want to give a special thank you to our guest, Professor Makayla Lavender. You really opened my eyes to a lot of changes that are coming this way. And I think Me and my listeners are a lot more educated going into this open enrollment than we would have otherwise been. So thank you very much.
Thanks for having me. It's been fun.